Hello, this is Pat Walker at Mission Winners. I'm doing a video for everybody about the stocks in the top 20 groups that have good fundamentals and also good technicals, and they're within 20% of 52-week highs and they're over the 50-day. It's a fairly loose screen. I don't put a lot of constraints on it, but here's what's intriguing. Normally, this screen for the top 10 groups comes up with 15, 20 stocks. Good stock, really good stocks. All right, I rest in them. We loosen them because the market's so crummy to the top 20 groups. And this is what's intriguing. I'm going to show you this right now. I'm going to slide this in. Take a screenshot of it if you want. With these screens, these are the list with stocks that fit the criteria. That's it. Group rank 2, 3, group rank 4, 14, 15, and 17. That's it. That's downright skinny. That's the stocks that meet the criteria, and these are the groups they came from. So let's take a look at them. Let's look at these stocks, all right? Here we go. I'll drag that out. First stock on the list is Teladoc. Teladoc has an earnings per share rank of 36, but I'll tell you, it has a composite rating of 96, relative strength of 99, and accumulation distribution of C+. In an awful market, this is good. Now think about this, all right? They provide on-demand healthcare services. And so, you think about what's going on with this COVID-19, and they're able to supply, and you're going to see another one here shortly, they're able to supply a product or service to satisfy a niche. And that's wonderful. That's truly wonderful. But look at the chart. Fell, gapped up and closed down on a pickup in volume, and then fell again Wednesday on really heavy volume. And now it's lifted up on Thursday and Friday, but on substantially less volume. It's telling us that there's some selling in there. It's got a C+ accumulation distribution, but it's telling us there's some sellers in there, all right? It's going to need some real power to take out that top. This is not the, and I'm not knocking, please, I'm not knocking the company. No way. No, we're just looking at the chart saying, is there an opportunity to buy it? It's not really clean and simple right now. Here's the number 2 stock on the list. And this is in computer software enterprise. Zoom. This was a good stock. We bought this here. VIPs also bought it here. Keyless stock twice. All right. And it's lifting. It's lifting. We all know what Zoom does. I don't need to explain it to you. It's in group number 3, computer software enterprise. All right. And it looks good. And it actually, on Friday, in a wild day, this stock closed up, lifted out of a little pennant formation. That's an aggressive entry, but it did. But look closely at this chart. Is this a low-risk entry? Well, if you're really fast, it's a pennant formation above the moving averages, and it's in a great group with great numbers, okay? I mean, last quarter's earnings up 275%. Revenue's up 78%. This is great. Relative strength, 99. This is not the safest entry here. So, and you can say, what do you mean? It's not a longer base. So if you buy it, be prepared to sell it if it falls back into the pennant. And it's also should have been bought Friday. So it was on the key list, by the way. But anyway, want to show it to you. So let's continue onward. The next stock on the list, all right, is DocuSign. This, what do you call this, folks? I'll tell you what you call it. You call it wide and loose. I mean, the stock's got an earnings per share rank of 84, composite rating of 99. Last quarter's earnings up 100%. I mean, yeah, it's great. But it's just really loose. By the way, these 2 little marks here tell me that it was written up in IBD. So is there an entry spot for this? Possibly. You can say, well, Pat, what would it be? Taking out the highs. Taking out Friday's highs. Had slight volume pickup, closed near the highs. Is that an aggressive entry? Yes, it is. If you buy that and it falls back down into this section right in here, below Friday's highs, you got to be prepared maybe to sell some. Now, do I day trade these? No, I'm not a day trader, all right? So, but you might have to be one on a pattern like this. This is not clean and simple. You're not going to find this pattern in any chart book saying, well, this is what you want to look for to buy. I mean, down on heavy volume, gaps, drops down on heavy volume. I mean, yeah, this was a good bar, okay? I'll grant you that, inside bar. But look at that reversal bar on volume. Just be careful with it. That's, I want to stress that, okay? The next stock on the list is 5.9. Computer Software Enterprise also, all right? I'm going to draw this back in here for you. It's group number 3, all right? There you go. So here we go. What do we have with it? Well, it's got a accumulation distribution of C-. That's not really good, okay? A lot of whipping around in here, okay? I mean, you got a little distribution in here, all right? No real distribution because low volume. Little distribution there, little distribution there. Ran up, closed in the bottom half of its range on a slight pickup and bottom. It's loose. This is really loose, okay? Yeah, it's got a composite rating of 98, by the way, so that's good, and a relative strength of 97. But it's awfully loose. You always have to sit there and ask yourself, this is a great, great tactic I'll share with you. Anytime you buy a stock or are contemplating buy a stock, the first question you should ask yourself is, well, is this a good one to buy? Okay. The next question is this. If I buy this breaking above these highs, Friday's highs, where am I going to sell it to limit losses? Are you going to sell it taking out the lows of that bar? That's almost a 10% loss. Do you want to do that? 10%? I mean, that's too much. So that's why, it's loose. So contrast this versus right here when it lifted. Right through here, okay? Nice tight shelf and lifted. So, again, be careful. Be careful. It's not the perfect, it's a loose setup, all right? Ring Central. RNG. Got a composite rating of 99. Last quarter's earnings were down 4%. Revenues were up 34%. Relative strength, 99, leading into new high ground. Look at that. The high right here is 252.20. The high here is 252. Just took this out. So what do you do with it? What are we going to do with it? Let's look at the hourly chart. 30-minute, excuse me. Well, look at that. See, this is good. When it pushed through that top, I'm going to go show you a great tactic here, okay? This is what we teach in Mission Winners. You're looking, when a stock breaks through tops, you want to see volume. Look at the high on this bar, 252.20, right there, okay? Go back to I'll do 30-minute. When it pushed through that spot, there was some real buying there. Big money was buying, okay? I'll just tell you that. Now, go back to the daily. It's a V bottom. It's a bit extended. And notice also how it backed off. The high, the pivot price was 252.30, a dime above here. But it's a deep V pattern, which is riskier. And if you'd have bought that at 252, I'll say you bought it for 252.30. Well, it closed basically at 239. All right, you're down 13 points real quick. You got to be careful with that. I'm just laying out the risk. Everybody says, "Oh, let's just do it." No, you got to have a plan. Have a plan to get in and a plan to get out. All right. All right. Now this one here, okay, 47. It's a biotech stock. You see, whenever you see it, this is a lesson for all of you. Whenever you see a stock trading really tight like that, the odds are 99.9% of the time they're being bought. I mean, that's super tight. They're being bought. And guess what? They are. So let's move on. The next one is Mellanox. All right. By the way, the biotech is in group 4. The next stock is Mellanox. All right. This is semiconductor. This is group 14. This was a good bar. Look at the volume. People talk with their mouths and vote with their pocketbooks. They voted. And since then, it's gone sideways. Earnings per share rate 96, composite rating 99. That's very constructive. Going across these tops, there's a possibility there. Relative strength 92, and when this thing was rallying up, relative strength was hitting highs. So there's one. There we go. And last quarter's earnings up 63%. Last quarter's sales up 31. It meets some criteria for us. The next one is gold, GOLD. This is in the group rank 15. Composite rating on this stock is 99. Look at how loose these bars, I mean, these are some major tail bars here, folks. It's settled down. Is there a clean entry here? That is this a chart pattern? Here's always the yardstick. Is this a chart pattern that you would see in a book on how to find great charts and buy them? It's a little bit loose, folks. All right? It's loose. Let it settle down. Perhaps it'll go sideways for several days and form a handle. Then there's a possibility. Earnings per share rank 81, composite rating 99. Okay? And then finally, this is from group rank 17. Citrix. We all know Citrix. Software strengthened. Look at this. This stock in a sloppy market, this stock hit highs right here. That's very positive. Stock's got an earnings per share rank of 71 and a composite rating of 95. Flopping around. So then I have a question for you. If you buy it, taking out these highs right here, all right, where are you going to sell it? Well, it's really simple. It's good above that line, that little yellow line on the chart. It's good above that line. It's bad below. But now let's think this through. Let's talk about it from a psychological level. It goes up and it starts to slow down, which could happen. I'm not saying it will, but it could. Why would it be met with selling so quickly? Think about this from a psychological perspective. And by the way, charts are nothing but a reflection of people's emotions, all right? It runs up and then it drops like a dang rock, all right? You think there's anybody that bought this here that didn't sell and watched it go down 20 plus frickin' points? Think there's anybody that did that? Yeah. And then it comes back up. You think there's people, you think there's any investors that have this what's called the break-even mentality? Oh man, I'm getting my butt kicked. When that stuff comes back to my price, I'm selling. Could that happen? Sure. It's a V. This is a V here, okay? Boom, boom. V's are more aggressive. They are riskier. Now, I'm not saying it's not going to continue up. That's not my point. But I'm just saying from a statistical fact, the probabilities of this running are not as high as a longer base breakout. It's just the facts. So, if you buy it, buy less shares. I just wanted to share that with you. And folks, that is the stocks that met the criteria. This is a really loose screen that I have, okay, that met my criteria. There's really not a lot of stuff in there that's super exciting. And that's okay. That's all right. The best part is this. Hopefully, by following us in Mission Winners, you're okay. You've missed a lot of this crud. So we don't force it. Just to let you know, we just get in line with what is. And sometimes you just got to wait. And that's okay. There's two types of capital in the market. There's financial capital and there's emotional capital. I'm going to tell you all something. And I'm sure you know this. You got to protect both of them. You really do. Keeps you in the game. Thank you very much. I hope you all have a great weekend.